Hey guys, this mentoring session is with Jarrell. I sent him the link. He'll be coming in shortly. I'm not going to be answering any questions, so if you guys want to sit in and listen to our session here, you're more than welcome, but I'm not going to be answering any public questions. So,
Hello. How you? Yo, hello. Can you hear me?
hey Jarrell. Yeah, can you hear me?
Yeah, I can hear you. How you doing, Sean?
Perfect. Doing good, bro. How are you?
I'm doing good. Doing good.
Awesome, man. That's cool. Did you guys do anything yesterday for Labor Day?
Yeah, mainly with just family, just have everybody over and we just like barbecued and stuff like that. Mainly that. What about you?
Yeah, I did the same thing. Went to go visit my wife's mom in Oceanside. It's like about like an hour south of like Orange County, so not
Uh-huh.
too far, but it was cool. Just hang out with some.
Traffic was bad though, right?
Oh, dude, it was horrible, man. Getting back home, I was like I regretted going there because I was like, man, could have
Uh-huh.
been home.
Yeah, no, because I'm going to SoCal this I'm leaving Friday, so I'm definitely gonna go through that traffic for sure.
Oh yeah, you get the NorCal traffic, plus you get the LA traffic. It sucks.
Yeah, we're gonna leave very early, like I think like 9, I think we're gonna leave around like 9, so
Well, that's solid.
hopefully.
Yeah, hopefully you skip like most of the traffic. You'll probably just get some of the LA traffic on the way down.
Yeah, hopefully. But I just hope everyone, because I know right now everybody's coming back from like Labor Day and stuff, so I know yesterday was really bad.
Oh yeah, for sure. Any holiday, it's like it doesn't matter where you're going. You're gonna have traffic either way if you're driving
Hmm.
or even if you're flying. It's always bad.
Yeah.
Yeah.
You know what? Give me 1 second. Let me open this. Oh wait, how so I seen that you got FTMO. Is that like a what you call it? That I used to use? Like that?
Yeah, yeah. So before like the first prop firm that I used was FTMO. That was like the very first one. Like back then there wasn't it was probably like in 2000, we'll say like 2021, 2023. There was prop firms that were around, but nobody like was familiar with them. And FTMO is the only one that I came across that like seemed trustworthy. And that's the one that I started with. So that's the first company that I used that kind of introduced me to prop firms.
Hmm.
They're pretty good. I mean, they've been pretty good like during the time that I use them. The only problem is that because they're not on the futures more like it's not like it's what happens when you trade with FTMO is that they trade this thing called CFDs, which are
Hmm.
contracts for difference. They're technically illegal in the US, but they kind of get away with it because they're on a simulated market. So,
Hmm.
like for example, for YM here, it has like this price, like it's like 45,245.
Hmm.
Uh, the thing with FTMO, and I'll pull it up right here, or let me see if I could share my screen.
Yeah,
I mean,
because that was one of the main reasons I wanted to go on the call because I was kind of like concerned about like not concerned but like interested in that. I was thinking about it.
oh yeah, no, for sure. It's just going to be a bit different because the problem with what screen am I on? Sorry, let me fix this. It's on the wrong screen. Oh, there we go. Okay, there we go. So yeah, so you can see over here like the price for YM is at 45,247. The
Hmm.
problem is on FTMO because it's on I don't want to say it's a fake server, but it's like a made up server. It's like their own server.
Hmm.
They set their own prices. So the pricing is like way off. So it's like 45,250 here.
Hmm.
But
Oh, okay. So it's
yeah,
very, yeah, okay. So it's not like
yeah,
on point. Yeah.
it's not on point. I mean, right now it's not so bad, but like if you're trading like at a time where like the market's not it doesn't overlap. Like say for
Hmm.
example, we go into like later in the evening, right? The numbers are going to be off by like 100 points. Like they're never going to be exact. So
Hmm.
like how we set like limit orders for our trades and stuff?
Yes.
Like you're not going to be able to get the exact price because the price is always going to be different. So
Oh yeah, that
that was a
makes sense.
problem with FTMO because like if you type in US 30 here, there's like so many different assets that you can look at.
Hmm. Oh, that's what FTMO is.
Yeah, yeah, and they're all gonna have different pricing. So it was like even on the actual the FTMO asset here, this is the FTMO asset because they own this broker, which is Awanda.
Hmm.
Even this is different. Like right here, it's at 45,201, and the
Hmm.
actual price over here is like at 45,250. So the
Hmm.
pricing is like so like you can't put like limit like you can't like the entries are not gonna cross over. You'd have to like get in at like a market order and then just take it that way. But I mean,
Hmm.
it's a good funding company though. Like the thing with FTMO is that they've never denied a payout from me. They were always like pretty consistent, and they were always on point with like with um with their customer service. Like if you ever had a problem, you reach out to them, they get back to you right away. If you have a problem with like say Apex or like any of these other companies, they usually take a while to get back to you. So
Yeah.
I would say if you were to trade with FTMO, like what I'm doing is I'm only taking swing trades. Like I'm taking trades at like the whole numbers and I'm just like holding it. Like for example, right now I have a pending order right here at 45,000 and I'm basically just gonna like I have my order just sitting there and I'm just waiting
Hmm.
for it to fill and then I'm gonna let it, ride up to this next level up here.
Hmm. Oh,
It
okay.
yeah, it's hard to scalp with them because the thing with theirs, like I said, the pricing's different. And then on top of that, you get a lot of slippage.
Hmm.
So
Oh,
like,
okay.
we get some slippage with Apex, but like the slippage with FTMO is like it's a whole different story, bro. Like I've
Hmm.
traded with them before and I used to do market orders and it's like it's not like super different, but because there's slippage, like, you can get in down, you try to get in right here and you'll end up like way up here.
Hmm.
Because
Because
like they
the
have because they have control over the spread too. Like see for example here the spread's like 30 points.
yeah.
Like if you compare it to like the actual spread, it's only two.
Oh, okay. I see. Okay, I see what you're
Yeah.
saying. Yeah.
Yeah. So there's like I mean there's pros and cons to it. FTMO as the actual, is just as a prop firm is good, but there's going to be a lot of cons to it, like in comparison to futures. The biggest difference that I think is like the game changer with FTMO is that they give you more of a balanced profit target and stop loss. Because like for example, with Apex,
Hmm.
so for Apex, it's if you're on a 300K, we'll just use 300K as an example because this is like their equivalent. So like your profit target, to pass the challenge is 20K, right? I think that's what it is.
Hmm.
And then your max drawdown is 7.5K, right? It's a big difference.
Yeah. Okay, I
Right.
see what you're saying.
Right. So see how it's like a big difference here between like, you can only lose this much. You could lose like maybe less than half.
Hmm.
But your profit target's 20, so it's really hard to pass an Apex challenge on 300K. The main difference with FTMO is profit target is 20K and your max drawdown is also 20K. See how it
So it's a
like
win-win. Then that
yeah,
one's
yeah.
like, okay, I know what you're saying.
Yeah, because Apex is really, really difficult to pass at 300K. Like, I mean, it's doable, but it'll take you a long time to pass it. The thing with FTMO is like you can do like a one-to-one type trade, or you know how we do like 1 to 2 for our breakouts and our scalp entries.
Hmm.
So like you could basically pass your FTMO with like a couple trades because you could take more risk. Um, the only difference here as well too is that so they have another thing where it's like daily drawdown, which is 5K. So you can't lose more than 5K per day.
Okay, so that's not even bad. Okay, that's why. Okay, that
Yeah,
makes more like sense for me. But damn, I didn't know Apex's zone was like that either though.
yeah. No, I mean, they have they both have their pros and cons. Like, obviously, they're
Hmm.
both going to have different pros and cons. The thing is, like FTMO, like like I said, I think they're good for like not super swing trading, but basically swing trading where you kind of like just set your orders and then you let them fill and you just let them run.
Hmm.
Um, you could scalp with them too, but like I said, there's a lot of slippage and there's a lot of spread. Because the thing is, so say for example here, if you try to enter this position, like say you want to enter a buy right here, right, or a sell.
Uh-huh.
So you'd have to cover the spread, which is going to be 30 points. So like say for example, you're going for and they use pips here versus points. So like let's say 400. 40 is basically 400. You just multiply it by 100.
Hmm.
So 40 200. See, this is going to be really tough because when you enter this position, you have to cover the spread, which is 30 points or 40 points now. So you're basically going to have to cover that. You'll end up like way up here, really close to your stop loss.
Yeah, I know what you're
And
saying.
it goes negative just a little bit, it'll stop you out. So
Yeah, no,
like
those few points matter too. Yeah.
Yeah. And then you get the spread plus you have to plus you get the slippage. So you might be in negative like maybe 40, 50 points or
Uh-huh.
40, 50 pips. So like when I used to trade US 30, I used to do it a lot wider. I would do something like this.
Hmm.
Like I would do like a
Oh,
big
yeah, that
target.
looks more
Yeah.
regular.
Yeah, so I would take, when I would take FTMO trades, I would take it with the bigger range versus like how we scalp on Apex. This is what it looks like.
Hmm.
See, it's way different. So yeah, I would say, if you want to use FTMO, it would be good if you're just taking like maybe just breakouts or taking swing trades.
Hmm.
Yeah, but
Okay.
that's the main difference. But it's good. I mean, there's nothing wrong with it. It's just that you have to trade differently. There are different types of firms with different types of criteria. Like how like with Apex they have the trailing drawdown, like like say for example, uh like say you were taking a trade like this, right? And you were like
Hmm.
profit, but say you get like really close to your target, like like really close to it, and then it goes opposite of you.
Hmm.
Even if you get stopped out right here in profit, if this is within your trailing drawdown, you can still blow your account even though you're in profit. You understand that, right?
Uh-huh.
Yeah.
Yeah.
So do you get that, or does that not make
Wait,
sense?
actually, wait, even if we move our stop loss down, we still get that we still get taken out.
Yeah, yeah. So like we talked about earlier, the max drawdown. But what account size are you on with
I have all 50s.
oh, okay, 50. So your max drawdown is going to be uh let's say 2,500. I think that's what it is, right?
Yeah, it is that one,
Okay.
yeah.
Yeah, so just use this for an example here. Say price came down and say your full target right here was 3,000. Just say for example you wanted to pass this like with one go. So,
Hmm.
your goal right here, your profit target is 3,000, right? We're just going to use this as an example.
Hmm.
So say, for example, price gets really close to your profit target. Say it goes down to like right here, right?
Hmm.
So at this point, you're in profit 2,500, right?
Hmm.
We're just going to use that as an example. Like say, for example, um, we'll say current 2,500, right? At this exact price point. So if this ends up going backwards, and your stop loss is at break even, like right there, you go negative 2,500, right? Because you're currently 2,500 in profit, but if it goes the opposite way, you're gonna be negative 2,500, right?
Hmm.
That makes sense.
Yeah.
So if your max drawdown is 2,500, then you blow the account even though you're in profit.
Wait, what?
Yeah, because you can't go negative 2,500 even if you're in
Yeah.
profit, you can't go negative. Like you can never go backwards 2,500.
Uh-huh.
So
Okay,
that's
now I get what you're saying, yeah.
This is why a lot of people don't like Apex because a lot of people don't scalp and they don't like to take quick entries. They like to take bigger entries like like I marked up here. But you can't do that with Apex. That's why like this is good for something like FTMO or Tradeify or companies that don't have a trailing drawdown. Um, what you want to look for is it's called an end of day drawdown. So that's the difference between we'll say FTMO and FTMO and Apex because Apex has the trailing drawdown. That's why if you ever look at Apex, you'll see a lot of complaints. People will be like, "Oh, I blew my account and I was still in profit." It's because they don't understand how trailing drawdown works.
Hmm.
That's why, like for us, it's better to get out very quickly. Like how I took my trade today. It's better to just get out and then claim your profits versus letting it run. Because if you let it run and it goes negative on you, it's gonna
Hmm.
get into your trailing drawdown.
I should have took that as a sign. When you got out, like when you accidentally got out, I should have just got out.
Oh, you held on to it.
I got out like I think I only lost like 100 on each account, but
Oh,
like I
okay.
was in profit though. Like I literally got like 2 seconds later and it just
Dude, I
went
know
up.
it was like I was kind of bummed out when I got stopped out because when I stopped out in profit because I was like, damn, this thing looks like it's gonna dump, like go straight to
That's what
target.
I thought.
And then like 2 seconds later it goes the complete opposite. I'm like, dude, the market is so fucked. Like,
No, good thing you got out because you got profit from it.
oh yeah, no, it's because of the because where we had if you ever notice it, whenever we come back from a holiday weekend or a long weekend, the market's always like that. It's like all over the place.
Mhm.
So
Oh,
like,
it is. Yeah, yeah. You did
yeah,
mention last time.
yeah, because technically this is like our Monday, and
Hmm.
like there's a lot of like crazy volatility going on throughout the market. So like I think it's like super risky to trade on well, Monday in general is pretty risky, but then trading on a holiday or coming back from a holiday, it's even like you kind of double the risk.
Hmm.
Yeah, so yeah, I mean that's the difference between the two companies. I don't know if you plan on using them at some point. They're just so there's a lot of pros though. So like for example, you pay for your eval phase. Like for
Hmm.
example, Apex, you pay like 30 bucks or whatever, or 50 bucks for your eval, right?
Hmm.
With FTMO, you pay, it just kind of depends on like which account you want. Let me see if I can pull it up here.
Yeah, I think after I pass these 50s, what would you recommend getting after passing these the 50s?
I would just, well, if you want to just get payouts, like consistent payouts, I would
Yeah.
stick with 50s because everything else is going to be a lot more difficult. Like you could do 150, it's going to take a little longer to pass, but the 50s are easy. It's like you can just, like you can pass those and then you can get payouts like right away. If you do
Hmm.
150s, it'll probably take you a little bit longer because you have to pass it. And then after that, you still have to make profit.
Hmm.
So
But
I would just stick
I
with 50s initially.
yeah, okay, okay. So
Yeah.
just buy more 50 accounts after I pass these.
Yeah, exactly. Like I don't think you should really do FTMO because you can't copy the trades. Like there, it's a totally different.
Oh, okay, okay, okay. Yeah,
Yeah.
never mind. I don't think I'm gonna do FTMO.
Yeah. So there's no point. I mean, unless you're like able to, like, for me it's easy because I could just take the trades and I don't have to really think about it. But for you, it's like a little difficult because it's going to be a completely different platform. Like you
Hmm.
got to use this platform here, which is MT5. It's a super old looking platform, like.
Yeah, I'm looking at it right now. Yeah, it looks.
It's gonna be really hard for you to understand because it's not an easy platform to learn how to use. So
Mhm,
it's probably not the best decision. But like what I was gonna say was, like, say for example, you're doing like a 50K account and you pay like 345 in euros to do the challenge.
mhm.
Once you pass it, like once you get funded, they refund you that fee.
Oh, so wait, but I only have 4 days to pass it though.
Uh, no, the 4 days is the minimum trading days.
Oh, okay, okay, okay.
You could take forever. You could take a whole month. You could take a whole year if you want.
Hmm.
You can take as long as you want. So you just pay that one fee and you just have to pass it. Once you pass it and you get your payout, they basically refund you your account fee.
See, that's damn. I wish Apex did that.
I know, right? Because like then you don't have any risk because it's like okay, you pay 300 bucks, but as long as you don't fuck it up and you don't blow the account, at the end of the eval, you'll get the money back. You basically get a refund plus you get a payout.
Uh-huh. Oh yeah, that makes sense. So that's why the pros and cons is like FTMO. Their platform is pretty good though. Like just by
Yeah,
looking
yeah,
at
yeah,
this.
and they've been around for a long time. Like they're like one of the longest running prop firms, like in the space in general. Like before everybody was on FTMO. That's why for me, I paid a little extra. So I got the 200K account. I paid about 1,300. It's 1,080 euros, but conversion to US, it's about 1,200, 1,300. And I was
Hmm.
okay with that because like as long as I don't blow up the account, I'm gonna get the money back eventually.
Hmm. How long you think this is gonna take? Since it's like swing trading, how long you think it's gonna take?
Mm, it's gonna take because on average, I'm probably gonna get like maybe two or three entries. So it'll probably take a month because every time I'm taking a trade, I'm basically risking about like 5,000. So I basically would need like 4 winning days to pass it.
Hmm. Oh, okay,
But since,
okay,
but
okay.
since I'm swing trading, it's not gonna, these trades don't come every day.
Hmm.
Like for example, I have my pending order right here at 45,000. I don't know if this will even get filled today. This might get filled tomorrow, might get filled Wednesday. I'm only trading between Sunday and Wednesday.
Hmm. Oh, for FTMO.
Yeah, yeah, because the thing is like you still have to close out of the position by Friday. And you can't swing something from like Thursday to Friday because at that point you're gonna probably have to close out early.
Hmm.
Yeah, because these swing trades take a while. They don't hit right away. They usually take like maybe a day or two to hit.
Hmm.
Yeah.
Yeah, probably
So
in the near future, I'll probably like look into FTMO, but I think
yeah,
as of right now,
yeah,
I'm
yeah.
not.
I don't think you should right now because if you swing trade on these, it's gonna mess up your thought process because the style of trading for swing trading is way different. It's a lot nicer because you don't have to worry about it as much, but you don't want to confuse yourself swing trading and then also day trading because then you're gonna be confused, right? You're not gonna know what to like. You're gonna be confused with the strategy and like where to enter, and you're gonna be looking at different platforms, and it's gonna be easier to make mistakes.
Yeah, yeah.
Yeah.
Wait, so what's the difference with like swing trade? That's just like it just takes all day.
Swing trading could take days, it could take weeks, it could take months. That's how
Uh-huh.
swing trading is. Like you're taking a position in the asset. Like for example, here I'm taking a position at like 45,000. I'm expecting this to push back up. So what I'm looking for here is I'm looking for price to dip and then push back up.
Hmm.
So it's a swing trading means you hold on to a position for like maybe a couple days, maybe a couple weeks, maybe a couple months.
And it's a lot slower, like the candles.
Well, it's not slower. You're just trading it on a bigger time frame. So like
Oh, yeah, okay, okay.
instead of going for 40 points, we normally go for 40 points
Hmm.
in our day trading. You're going to be going for like this would be 250 points,
Hmm.
right? So 250 points versus 40 points, that's a lot that's a big difference.
Yeah. Oh no, 100%.
Yeah. So yeah, so the swing trading is really just taking a position and then holding on to it for a long period of time. It usually will last days, if not weeks. The thing is, you can't really hold it for weeks, even on FTMO, because they force you to liquidate your positions by Friday.
Hmm.
Yeah, you can't hold it longer than that.
So it's really you only have like what 7 days to stay in.
Basically, seven, yeah, or not even 7 days. You're from Sunday until Friday.
Oh damn.
Yeah, because the
Okay,
market
so
opens up on Sunday and then it closes on Friday. So
oh
you
that's
only
why you
have
said Sunday to Wednesday.
yeah, because I only look for trades from those days because like I mentioned, it takes a couple days for them to hit.
Hmm.
That's why for me, I would have to Wednesday would be the last day. That'd be my cutoff because I can't take a trade on Thursday and then it's still like kind of floating until Friday. I want it
Hmm.
to like actually hit by then.
Okay, okay. Makes
Yeah.
sense. But yeah, I ended up like I took the breakout in the orb today.
Oh, both?
But
Okay,
yeah, I
nice.
took both, but I broke even because of the orb. But it's fine. But I
Yeah.
honestly, so the breakout and orb, they always like land next to each other. Like it's the breakout literally. How can you tell if it's gonna like sell though? Like I literally just listen to your command, but I'm trying to understand like how
Oh yeah. So like we'll look at the breakout for today. So you're just looking at the momentum before market open. So for example, over here, this was the breakout for today. Market opened up at 6:30, right?
Mhm.
So at 6:30, you just look back at the most recent momentum signal. So if it's a sell signal, it's a sell. If it's a buy signal, then it's a buy.
Oh, so you just look at that and then that's how you okay, okay, okay.
Yeah, yeah, because you're just taking the direction of momentum. You're expecting the momentum to continue. So like we had a sell signal here. Market opened up at 6:30. So at 6:30, that's when I was like, or around 6:29, I was already telling you guys like, all right, momentum breakout's going to be a sell. So as soon as market opened up, you take the sell and then it pretty much goes in that direction.
Dumped.
It doesn't,
Yeah.
yeah. It's a super, super simple strategy. It's just, it's hard to take both. Like I was surprised you were able to take both because a lot of times they overlap, right? Like they happen at the same
Yeah.
time. So it's hard to take both. You have to like pick one or the other.
Yeah, I literally I think I got out in the breakout, I think at like 30 points. And
Hmm.
then I just waited until you called the orb and then I got into the orb and I was in profit for both. I was like, whoa. And then that happened and it went up. I was like, no, but it's okay.
Yeah, the
Yeah.
work looked good. I mean, honestly, I saw it and I was like, damn, this looks good. So, cause that's why I was like convinced to take it because I saw it and I was like, everything lined up. But it was just highly manipulated. Like, let's go back to the
Hmm.
board here. So like price came down below. I
Hmm.
already knew this was going to get manipulated because everything was pointing towards a sell, right? So it's like, oh, this is going to be pretty simple. And the thing is, this candle was huge too. Like that
Hmm.
orb candle, the candle that broke the orb.
Hmm.
So that when it got to this point, I was like, okay, if it's gonna if it goes past the 40 points, I'm just not gonna take it. But right here, it was just really close to it,
Hmm.
and then it ended up, going back and forth for it. This is where I started to think about it. Actually, the
Hmm.
orb hit today, didn't it? Oh,
Uh,
it's swung up right here. That's what happened.
yeah.
Wait, no. Oh no, never mind. My bad. The target's not at 40. I was like, there's no way this thing didn't hit. Yeah, because here we go. That's how it was marked up, right? So I took it, and then right here, this is when I moved my stop loss and profit because I was like, this thing was just going back and forth, and I was like, I don't like the price action, so I moved my stop loss and profit, and thankfully I did because it ended up just
Yeah, and
skyrocketing
it just skyrocketed. Yeah, I got out before it got past a little bit,
just like
so I
that.
think I got out like negative 10 points. So
Yeah, and it's super annoying because like you're on the 1 minute, you're not expecting these huge candles to come out of nowhere, right?
mhm,
Like this thing shot up, yeah, almost 50 points.
50 points. Yeah.
That's
I thought
crazy.
it was gonna dump like after the green when the green candle went up, like shot, I was like, no. And then I thought it was gonna dump, hopefully, but
Yeah, yeah. I was hoping like with this one over here, with this red candle, I was like hoping that because the thing is when I moved my stop loss and profit, I was like I didn't even realize that it was gonna stop me out because it was moving back and forth so quickly. It was like up, down, up, down, up, down.
mhm,
And when it pulled back, like when it got down to this point, I was okay, cool. I'll move my stop loss and profit to like right here. This is where I put it at,
mhm,
right below the at the red candle. But immediately, as soon as I dropped it right there, it just spiked up really quickly and it pulled me out.
Uh-huh. I mean, good. I mean, man, you got profit. I feel like everybody ate that one for sure.
Yeah, yeah, I know. Like, especially the people who aren't paying attention, you know?
Yeah, yeah, yeah.
Like, there was no way for you to really know unless you were paying attention to like my analysis. Like, you had to literally be listening and watching it.
Mhm.
And I feel
I
like a lot of
think
people took it and they just left it. And then they came back, they were like, oh shit. It ended up going opposite.
I literally hover over close like a point. I could literally close in point 1 second. I literally just watch in point 1 second. So it's like the second I see, I just either get out. But
Yeah, yeah.
um,
You know, if it doesn't feel right, that's what I always tell people. Like, if the trade isn't feeling right, just be ready to close it out. Like, there's no need to hold on to it and then stress out about it, right? Like, it's better to just
yeah.
pull out than to think, you know, I woulda, coulda, shoulda pulled out, but I didn't, and then you
Hmm.
regret it later. So, you know, you just want to be fully confident about the position. Even if I'm still in it, if you don't feel, you know, if you don't feel good about it, I would just say pull out. Like, even if you're in profit.
Yeah. Yeah, I
Yeah.
mean, I'm just very picky with like even taking trades. Like I rarely take trades, so I low-key
Mhm.
just watch until I'm like more confident in it.
Yeah, yeah,
So,
and that's good. I mean, it's good that you're like being really cautious because there's a lot of people who aren't cautious, right? They just take every single trade and then
mhm,
they have good days, but then they have really bad days too because they take, you know, the trades that aren't good. Like for example, the entries for today, like there was a high-low break and retest, but I told people like, you know, it's not a good time to take it because the volatility was too high.
mhm. I know, I
Like,
think it hit like what, 30 ATR or
yeah,
so.
the ATR was super high for like for what we're used to, right? Because yeah, the ATR was at 28, went up to like 30.
Yeah.
Because normally it's like below 20. So there it was like at 36 today.
36. Holy
And this was
man.
before 7 o'clock. It was like these candles were just crazy.
No, that guy, yeah, yeah.
Yeah, every time it came down, it shot right back up. Like this was a high-low break and retest, but you know, I already knew this was gonna happen. So I told everyone, like, you know, don't like just don't take it. Wait for it to retrace up.
Hmm.
Because it was just faking out in both directions. Like it didn't matter if you were taking sells or buys. It was like
Yeah.
you sell, you get screwed. You take a buy, you get screwed. You take sell, you get screwed.
Hmm.
Like there's so many ways to get uh basically trapped in these positions.
Uh-huh. And then it could look like a sweep also, and then it could just shoot right up or shoot down. So it's like,
Oh yeah, yeah. Especially right here because you know price was starting to range a little bit. This is not when
mhm.
I was like, okay, if you want to take any entries, you know, look for sweeps. But then eventually this thing just ended up like going right back up, like right there.
Yeah, like right here, and then it just stayed in that area.
Yeah, yeah. It shot up right here super heavy and then it just stayed within the range here for the rest of the session.
Yeah, right here. I think right here I was like, oh no, I think it's really over. I think like when it's like 7:15-ish, it starts slowing down like
Oh
really
yeah.
bad.
Yeah, like
So
7 o'clock it starts to slow down, but then 7:15, like you said, it starts to really slow down. Like for example, right here, 7 o'clock hit, like it
mhm,
literally was on the dot. 7 o'clock was when price got into this range. And then
mhm.
after that, it was just going back and forth for like the rest of the session, like another hour.
Yeah, I was like, yeah. And I was gonna ask you, so like the imbalances, like what is that? Like, cause I see you talk about it, but like,
Hmm.
what is that like a range of like what is that range?
So an imbalance here, and I'll just take this stuff off. Let's just clean it up as much as we can. I'm gonna take off I could leave the pivots on. You can kind of still see stuff here. So
Yeah, 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 yeah.
basically, the way that imbalance works is that you're looking for price to like what happens here is like price gets pushed up too heavy.
Hmm.
Like, see how we get these big green candles right here?
Yeah.
Like, what happens is like whenever it pushes up too strongly like this, it eventually has to come back down, right? That's like typically the consensus.
Hmm.
So the way that these imbalances work is if you look back at these previous candles, so look how like a lot of these they touch each other, right? There's this balance in the market where these candles are right. This candle pushes down, this candle pushes up. They're all kind of touching each other, right?
Hmm.
See how these are kind of touching each other? These are all kind of touching each other too. There's not really a big gap in between them.
Yeah.
Balances are created, and let me turn off the pivots. I think this will help a little better. Yeah. So the imbalances happen when something like this happens. So see how we established there was a low right here? Like we got to the floor basically.
Yeah, yeah.
And then see how this pushed up? It was a big green candle.
Hmm.
See how this big green candle right here is not touching. See how this one is not touching this one right here?
Hmm.
So that's the imbalance right there. That's how I
Oh,
create.
so that's how you create the range. Okay, I see what you're
Uh,
saying.
yeah. So see, like there's an imbalance here because usually they're supposed to be touching or they're somewhat connected, right? Like for example, you look back over here, price will come down, but then it'll come right back up, right?
Uh-huh.
So this is another imbalance. This is an imbalance for a sell. See how this big red candle came up
Hmm.
and this green candle is not touching this red one?
Yeah.
See how this becomes, and I'll color this red because this is an imbalance for a sell. See how this becomes an imbalance and look how price comes back to this area, right? Comes down and then it comes back.
Hmm.
And then it kind of sits here in the imbalance and then eventually it balances out and comes right back down.
Also, that's how you could tell if it's a sell imbalance.
Yeah, exactly. Because, well, it's a sell imbalance if it's coming down. Like, say, for example, there's a red, like the red candle is a gap and it comes down. So this is
Hmm.
an opposite because this is a green candle, it's pushing up, right? There's an imbalance to the upside. So Uh, that's how the imbalances are identified. The thing is, these imbalances happen a lot. Like they're not like, they're not dime a dozen. They're, like, these things come up so often that you have to be able to identify like which imbalance is actually important and
Hmm.
which one isn't, right? So
Yeah.
like I'll show you right here, like all these green, see all these green candles right here?
Hmm.
So see how there's an imbalance right here, right?
Yeah.
There's also another imbalance following it because so we had this one right here, which was this imbalance and this one between these two candles. Now we have this one right here, and it has another balance right here,
Hmm.
right? Does that make sense? The other imbalance?
Can you repeat that one again?
Yeah, because so you understand how like this imbalance was created, right?
Yeah, yeah, yeah.
So do you see how there's another imbalance right here too? Because these are also not connected,
Yeah.
right? This one over here is not touching this one up here.
Hmm. Oh, yeah, yeah, yeah.
So now there's another imbalance. So
Oh, that's the
like
one that was from earlier, huh? The two that was stacked on top of each other.
yeah, that was the one from earlier. And I was looking for them to come back down and pretty much invalidate them or mitigate them, meaning that they're no longer valid. I think someone in the chat asked today too. They asked like, how do you nullify them? Like, how do you pick and choose which one's good and which one's bad? So these right here are still considered good because they haven't been broken yet. Again,
Hmm.
see how price over here pushes up again, and there's another imbalance between this candle and this candle right here.
Yeah.
See, like this pushes up, then it creates another imbalance. So there's just a bunch of imbalances here, and you're just waiting for them. So this one is actually one that got confirmed. So let me go back over here. Yeah, so see how we have three imbalances? The way that I confirm it as a good imbalance is if it bounces off it. So if it basically break and retest the imbalance.
Oh, okay. The top of the imbalance, yes.
Exactly. So see how there's imbalance here? Price doesn't come back to retest it, right?
Hmm.
Just keeps pushing up higher. So until it's retested, I don't consider it like a valid imbalance that's been, considered strong. So right here, see how there's another this imbalance is created between this green candle and this one over here.
Hmm.
So if we go one candle forward, see how this now it retests the imbalance and it doesn't invalidate it. So it comes
So it doesn't poke, it doesn't go through.
and go through it. So when I see something like this indicates that okay, price is going to continue pushing up higher.
Hmm.
So with this here, now that you have this imbalance created, see how price now pushes up?
Yeah.
So like basically right here, you're familiar with the MPSV2, right?
Yeah, yeah.
So this right here would be a good MPSV2 entry because we have a buy signal here. We have a retracement, we have confirmation. Because we have
Hmm.
the imbalance here, this is a good confluence because it shows you that, okay, price came up, retest the imbalance, and it's likely to push up higher.
Hmm.
So right here, you have an MPSV2. This is an MPSV2 that I think a lot of people in the group took today, right? It's MPSV2, you take the trade is active, and it shoots right through. So we use the imbalances as a confluence. I don't take it like as it bounces. I mean, you can if you wanted to. If you want to catch the bounce like that, like price comes up, bounces, and you enter right away. You
Yeah.
could, people trade that way. But for me, the way that I use the imbalance is I use it as a confluence. So
Mhm.
like
Instead of yeah.
exactly. So if I see an MPSV2 right here, and then I see there's an imbalance that's retested, like confirmed, in that situation, I'm like, okay, this is going to be a good entry, or it's going to be something that I'd be willing to take.
Hmm.
Yeah. So that's how the imbalances are identified, and that's how you confirm them. And then the way that they get invalidated, see how price came down again right here?
Yeah, and it just went back up.
Went back up, yeah. So once it's confirmed once, it usually retests it. And if it retests it again, it confirms that it's a strong imbalance.
Hmm.
Again, right there, retested it, came back up, and then it finally broke below right here. And this is where it mitigates it or invalidates it because now it's no longer price is now balanced, right?
Yeah.
Because whenever price creates an imbalance, you're always looking for it to balance back. You're looking for it to come back to it.
Hmm.
So again, right here, it breaks above it again, retest again there. And then now that price finally breaks below it, that's how you know that it's, the imbalance is done. And now you can pretty much take that off and you probably look for
And then
imbalances.
you work through that imbalance. Okay, I see what you're saying.
Exactly. And then you look for imbalances the other way now. So same thing that we talked about. Let's see. So same thing that we just discussed. So these aren't imbalanced, right? Does that make sense? Because see how all these candles are touching?
Yeah.
Like see how this body is touching this body touching this body, this body touching this body?
Hmm.
So there's no imbalance, right? This is all balanced. See,
Uh-huh.
all these candles are like they're touching each other, right?
Yeah.
And then see right here, it's still touching each other, but then right here, I mean, this imbalance is too small. They're still touching each other. This candle's
Yeah.
touching this one. So there's no imbalances.
Hmm. Oh no, yeah, I understand it. But like the second the candle doesn't touch, like then that's how you could create it.
Exactly, yeah. And you want there to be at least like somewhat of a gap, right? Like, because you want the imbalance to be like decently sized. You don't want it to be like super tight.
Hmm.
Like price keeps moving around. See, these are all touching, right? See all the candles are touching, they're touching, they're touching. So there's no imbalances.
Hmm.
What you're looking for is you're looking for like an outlier. Okay, so for example, right here, let me just clean this up because this gets invalidated. This gets invalidated. Now we have an imbalance for a sell right here, right? We have a
Uh-huh.
candle right there, and see it's not touching this one.
Oh yes, yeah, yeah, I see.
Yeah, so now there's an imbalance. So now that you have that imbalance right there, this is now an imbalance for a sell. So like you're looking for the same thing and it actually already tested it. So let me go back. So see the imbalance is created. And like I said, what you're looking for when you have this imbalance is you're looking for price to balance back out. So you have an
Hmm.
imbalance here because there's like a price gap, and then you're looking for price to come back and balance out. So once it balances out, you're going to look for price to either, so once it comes back and touches it, you're going to have to look for two things. It's either going to break above it, invalidate it, and then go back up,
Or a retest.
or yeah, or a retest. So if you have a retest here, say for example, price gets to this point, retested and drops lower, then if you have a sell entry down here, like an MPSV2 or a high-low break and retest, then that's going to be a strong entry, right?
Hmm. Oh, okay, okay, yeah, yeah.
Yeah. So see here how it bounces off,
Hmm.
and then now that it bounces off like that, you'll be looking for possible high-low break and retest to the downside. Or, if you have what it doesn't have to be a high-low break and retest, just whatever sell entry. So right
Uh-huh.
here, it keeps testing it, test it right there, test it right there, test it right there. Um, it just keeps testing it until it breaks it. So like once it breaks it right there, then it's no longer an imbalance because price is balanced now.
Hmm.
Yeah.
Okay, that makes sense.
Yeah. So this is why I was saying like, I wouldn't take this as just rejections because it's not always going to reject off it, right? Like for example, it rejected right here. That's fine. It kind of rejected right here, but then you get faked out eventually. So that's why for me, I use it as a confluence, not exactly entry
As a
point.
strategy. Yeah, yeah.
But it's a
Okay.
strategy. If you ever look it up, like, imbalances, you'll see people use them as actual strategies, but you'll see that they get caught up in a lot of like bad imbalances because they're not all valid.
Hmm. Okay,
Yeah.
that makes sense now. Yeah, I probably would just use that as confluence then.
Yeah, exactly. And at least like when you have that confluence, it's going to give you the confidence and the confirmation that okay, if you take a trade, uh it's likely to weigh in your favor, right? So like if you lose the trade and you have the confidence or you have the confluence there, you're not going to feel bad about losing it. Versus if
Hmm.
you just took a trade and you're like, fuck, I don't know why I lost this trade. You'll see that, and this works in both ways. Like um, say for example, you're looking for a buy, right?
Hmm.
Like say your price came down, and then for whatever reason you were looking for a buy down here.
Yeah.
Because you have an imbalance right here, I wouldn't even bother looking at buys, right? I'd look for sells instead.
Hmm. Oh
Yeah.
yeah, yeah, I get it. Yeah.
Yeah. Because the confluence works both ways. It works in a way to avoid entries, and it also works in a way to confirm your entries.
Hmm.
Yeah.
Okay, I get it. And then I also had a question because I think I was reading like people would like trade fair value gaps, and I didn't understand what that was. But
Hmm.
is it like similar to like imbalances or
What was that? Sorry.
like imbalances and like
Oh
fair
yeah,
value
yeah.
gaps?
No,
Is it very similar?
it's exactly the same. It's just a different name.
Oh, it's just a different name. So that's just what it is. Oh, okay,
Yeah,
okay,
they
okay.
just overcomplicate it, fair value gaps. Well,
Yeah, I
like
was.
the thing is like fair value just means it's in balance, right? Because if it's not fair, if the value isn't fair, it's imbalance, right? Because it's showing that price shouldn't be down here. Price should be back up here where it's balanced before the
Yeah.
yeah. So like it's the same thing, the same concept. It's literally the same concept. It's just fair value gap is just another name for it. Imbalance is like I would say it's the more legit name because when price breaks past the area, price is imbalanced, right?
Yeah.
If people say fair value gap, they're just looking for price to go back to fair value. Because if
Hmm.
price pushes away, and what it means is what they mean by saying fair value is that okay, this is like price down here is too cheap, right? It shouldn't be this cheap. It's gonna have to go back to where it was before, and
Hmm.
the imbalance is really where the fair value is considered.
Okay, yeah, I get it. Okay. So it's
It's just
basically the same thing. Okay.
yeah, literally same thing, just different name. And then sometimes they call it inverted fair value gaps. That
Hmm.
just means that it's been it's flipped the other way. Like price is down here, and then it breaks it. Like I mentioned earlier, it mitigates it or it nullifies it or whatever you want to call it.
Yeah.
For me, I try to keep it simple, right? I give it like super super simple names so it makes sense. I don't use anything complicated, but inverted just means that it invalidates it and it's going the other way.
Hmm. Okay, yeah,
Yeah.
I get it now.
Yeah, it's a common strategy. Like that's like one of the super hyped up strategies right now. Like the more and more you trade and the longer you trade, you'll see
Yeah.
those periods where strategies are gonna get hyped up. It's like everybody on YouTube's applying it, but it's like when you try to do it, it doesn't work, right? It's like
Uh-huh.
whenever you see people on YouTube, they're like, oh, every single fair value gap works, but it really doesn't. Because if you look back, I marked up all these fair value gaps, they don't all work. They're very they're like very specific.
Hmm.
So you have to like for me, I like to use it as confluence. Other people use it as the actual strategy.
Oh, okay, okay.
Yeah.
All right, that's good. Yeah, I think because like when you was talking about it, I would just like try to understand it when like throughout the sessions and stuff. But I was like, I'm gonna just wait till I like talk to him to like more understand it. But now I know how to mark it now.
Yeah, it's easier when it's one-on-one with you because then I can just tell you directly like what it is and what it means and stuff.
Yeah.
Because when you watch the lives, it's just too fast paced. Like there's so much
Yeah.
on, and you can't really understand what I'm trying to teach you on there.
Hmm.
Yeah.
Okay, yeah, I get it. I get it. But yeah, usually I would just lately, like I think there was a week where I didn't take no trades. I was like unsure, and then the ones I was like taking in my head, and then they all end up hitting. And I'm like, so then like then the ones that like I would get so bad luck, and the ones that like I would take, I was like they ended up not going in. But
Yeah, yeah. I mean, it's if you don't feel confident about it, then don't take it. But like you're your own trader, so like if you ever feel like okay, this trade might hit or it looks like it might be okay, then
yeah.
I would say just go for it, right? If you have your confidence, I mean, if you have your confluences, your strategies there, everything lines up, then go with it. Because that's what
Mhm.
happened with me that week too. I think we're talking about the same week.
Yeah, yeah, yeah.
Yeah,
That week we didn't take anything.
the thing is like my entries didn't actually come up, right? Like they would show, but there was no retest.
Hmm.
So like for me, it was like yeah, price would like for example, it would break like the high or whatever. Let me see if there's an example here. So these over here actually retested a lot, but there was that one week where it was like breaking past structure and it wouldn't retest.
Hmm.
So like with it not retesting, there was just no entry there for me.
Oh yeah, it was like I think it was a week where it was just like off by like a point or two, and it didn't like yeah confirm.
Yeah, exactly. Like those, see, if those would have retested, I would have taken them, but they just never retested. For a day like that, those were the days where like the direct entries would be more likely to that you would take like the MPSV2 or like like you said the momentum breakout. Momentum breakout's been hitting pretty much like every day for the past couple weeks.
I know
Uh,
today was the first time I ever took it. I never really took it.
oh really? Yeah.
Yeah, but I was
Well,
like, I'm gonna try to take it today.
yeah, that was actually so with that strategy, it's funny with FTMO, I used to take that strategy every day, but it was like a bigger target. So for
Hmm.
example, so today is Tuesday. Let me go over here. So for example, you know how we go for like 50-50
Yeah.
for FTMO because they don't have the trailing drawdown, I would take it for 1,500 or equal to like 150.
Uh-huh.
Like whenever I would take that trade, I would just take it and then I would let it run. The problem with the market now is that you can't really, or I mean with Apex at least, because you can't hold it overnight.
Hmm.
Like that 150 points would sometimes not get hit. So like what I would take a lot of times is market would open here at 6:30
Hmm.
or a candle before that. Yeah, so instead of going for the 50-50, the reason why I set it to 50-50 is because you want it to hit right away or you want to hit it before the day ends. With
Yeah.
FTMO, I would do it with 150. So the target would be super big like this.
Oh, okay, okay. I see what you're
So,
saying.
so I would take the momentum breakout and I would just let it run like it would take all day basically.
Oh, okay, okay.
Yeah, so see right here, it would end up hitting.
Yeah.
But we can't really do that. I mean, we could do it with it now, but like, let's see. Let me see if there's a momentum breakout where it doesn't go. Because there's some days that are just really slow and you'll just never hit the 150.
Mhm.
Like, for example, Monday. Monday was a holiday. So this is probably not a good day to show an example, but I'll just show you because I know for sure it doesn't hit 150 on this day.
Okay.
Because this is like the realistic market of like taking the momentum breakout here. So let's go over here. So we got a buy signal right there. So the momentum
Mhm.
breakout for this day is going to be it's going to be a buy, right? So normally when I would take this strategy, I would use a 150. See how
Okay.
big the range is? The
Yeah.
thing with this is that it's like less stress because you're kind of just letting the trade breathe. Like it just takes a
Mhm.
while for it to actually hit. See how it takes a while?
Yeah.
But the problem with Apex is that you can't hold it overnight. So like once it hits like 1 o'clock, you have to be out of your position. With FTMO, you could hold it overnight. So even though it doesn't hit today, like say for
Yeah.
example it doesn't hit, you could just hold on to it until the next day.
And
So like
then
there was like some days where like in the summer, like when I was using FTMO, like this trade would run for like 3 days, bro, because the market is
uh-huh.
so slow, and we just wouldn't get out of it because we were in this position from like 3 days prior. Like we would take it on Monday, the market
Mhm.
would just do this flat for the entire week, and then this thing would just be running for like 3 days. Like we wouldn't get out until like Wednesday.
Uh-huh. Did you ever have to like hold it until like Thursday? Like or you would get out Wednesday for sure.
No, no, I would just hold it until it hits. So yeah,
Uh-huh.
there was some times where like I would have to hold on to it for like a couple days.
Hmm.
See, because this is how the market is kind of sometimes. It just takes forever and nothing happens.
And
That's why
then
like that's why the 150 doesn't really work. That's why I switched it to 50-50 because it hits, at some point.
yeah. Oh, okay,
Yeah.
okay. So that's why you said it would take like a month.
Because you're basically swing trading it. Yeah.
Yeah.
You're just so far out. Yeah. So
Do you usually take the breakouts or not really?
not anymore because I like to set pending orders.
Oh, okay, okay, okay,
I
yeah.
take the orb, yeah, because I use limit order instead of getting in at market. Because the problem with getting in at market, and you probably got it, like you probably had the same problem today, is like you get slippage. Like you try to get in at a certain price, but then price spikes and you end up at a really bad entry.
Yeah, no, for sure. I got lucky and I got out pretty good too. I got in I think like 2 seconds after and then it shot down and then yeah, I got really lucky. And then
Yeah,
I think I waited a little bit and then the orb came up and I took that.
yeah, yeah. And that's what I was mentioning today too. So like when the entry came up, I said, wait for it to kind of pull back a little bit and then get in. And
Hmm.
that's kind of what you did. So you got in like good because sometimes it doesn't retrace. Like, see right here, this was your entry, this big red candle, right? So you
Yeah.
got the wick up top. This means that price pushed up like for a few seconds and then it came down. So you were able to get in late. But
Yeah.
sometimes it doesn't actually push up like that. It just dumps with no retracement. And then it just ends up, you click, like, say, for example, you click sell right here and you're expecting to get in like right here, right?
Uh-huh.
But then you click it and price pretty much spikes within a few seconds and you end up like entering from way down here.
Yeah, okay, yeah. That's I think okay, I got it at a perfect time. Literally with like where it dropped a little bit and then it dropped.
Yeah, yeah, you got lucky. Well, I wouldn't say lucky, but you got in at a better price point because you have like this wick here, right? Because the price pulled up a little bit, and then you waited for a few seconds. You probably got in like you were trying to get in here, but you probably
Hmm.
got in like higher, like up here.
Uh-huh. Yeah, that's what happened. Yeah,
Yeah,
that's what happened.
exactly. Yeah,
And then when it
usually,
dropped, I
usually
literally got
it's the
out.
opposite. Yeah, and you get out right away as soon as it hits target.
And then, so how do you identify like the orb? That's just like when it just breaks a retest mainly for the first retest, and then that's how you could just identify that one.
Yeah, so you identify the orb by marking up the high and the low from open.
Oh, so based off open. Okay, okay.
Yeah, yeah, it's for the first 2 minutes. That's so orb just stands for opening range breakout.
Uh-huh. Oh,
So
that's why you said they're like sometimes back to back or like they're like mirroring each other.
yeah, exactly, because the momentum breakout happens immediately on open, and then the orb happens 2 minutes after. So like this is where the orb's set up. You mark up the first 2 minutes, which is the high and the low right there, and
Hmm.
then the entry is typically going to happen after like the first 2 minutes.
Hmm. Oh, okay, okay.
Yeah. So if the market's choppy, you'll price like they'll overlap. Like the momentum breakout will still be running at the same time as the orb.
Hmm.
Yeah, that's why you
Okay,
can take
okay.
both. That's why no, most of the time you can't take both at the same time because you already have a position running.
Hmm. Okay, okay, that makes sense.
Yeah, because if you take both of the positions, you could violate one of the criterias for Apex because you're not supposed to double down on a position like that.
Because I would have to close out one and then enter the other.
Exactly. Yeah, you can't double down. Like you can't be in an active position and then you flip you add another one because they don't let you add on to losers. Like say for example, you took the momentum breakout and you're
Yeah.
in negative, right? And then you see
Mhm.
the orb come up and you jump in again, but you're in the negative on the other trade, you're gonna violate one of their criteria. It's
Okay, okay, I get it.
yeah, because they don't allow that. That's why like I can't take two entries at one time. I have to wait for one to finish before I hop in.
Oh, I got lucky then. I got lucky.
Yeah, I mean you're good now because you're an eval, but
Yeah.
once you're funded, they're pretty strict about that.
Also, then I can't do that.
Yeah, yeah, you have to choose one of the other entries, or if the entries follow up after each other, then you can take it, but you can't take them at the same time.
So what I did today was perfectly fine though.
Yeah, you're good.
Okay.
Yeah, because the thing is, it hit already. Your target hit, so this thing dumped, and the target was 50 points, right? So you hit on the
Uh-huh.
first candle already. So you already hit on this candle, and then the other entry came up a little later, right here.
Uh-huh.
So
Oh
yeah,
yeah.
yeah.
That
So
yeah,
so
okay.
you're okay. Today was fine, but like a lot of times they're not gonna happen right after each other. They usually happen at the same time.
Mhm.
Yeah.
Yeah, I might take the breakout tomorrow too, I guess. I'm gonna try it again.
Yeah, the breakout's solid. I mean, as long as the confluences line up with the breakout, I would take it. Like listen to my analysis in the morning. If I say it's probably gonna be a sell, like if I say like, the overall bias is for a sell or the overall trend is for a sell and then the breakout's for a sell, then odds of it hitting are likely. But if I'm saying
Uh-huh.
the opposite, if the breakout comes up for a buy, but everything's pointing for a sell, then I probably wouldn't take that trade.
Uh-huh, because it's like 50-50. You're just like gambling at this point.
Exactly. You want to have some confluences and you want to have some confidence in that direction that you're taking.
Hmm.
Yeah.
Okay, that makes sense. Okay. All right, well, I definitely learned that I can't do both now. So, but
Yeah, yeah. Well, once you get funded, you'll know because once you try to, so they don't tell you right away. Like you could take the trade, and then when you
yeah,
try to request a payout, they're gonna say like, "Hey, Jarrell, we looked at your trades here. You violated one of the rules, so like we're not gonna pay you out. You can keep trading, and then eventually on the next payout period, you can get a payout. So it's not a big deal. Like they're gonna flag you for it. Like they're not
yeah.
gonna take away your accounts, but they're not gonna pay you out. They're gonna say, "Oh, you violated a rule this pay period, so just keep trading, and then we'll pay you in the next period."
Okay, okay.
Yeah, so don't worry, you're not gonna lose the account. It's just they're just not gonna pay you out and you have to keep trading.
Okay, okay, sounds
Yeah.
good.
Yeah.
Uh, all right, well, that's mainly all the questions I really had. Because I'm very like honestly like I like what do you call it? Like even throughout the session, I literally just sit here and watch. Even when I'm not even taking trades, I just literally just sit here and watch. Like even the
Oh
ones that
yeah.
you would call out, and I don't take them. So I kind of like, but most of the time they like majority hits. I'm like, damn, I should have took those.
Yeah, yeah, exactly. That's why like you have to like figure out what you're comfortable with and what risk you're comfortable with. Because like there's some people in the group who take every single trade, right? I call out a bunch of trades and I say, you could take this, but take it at your own risk. And there's people that take every single entry and they kill it. And then there's other people who like are on the fence and they only take a couple. And then it's not balanced because you either have to take all of them or you have to take only the selected ones, like the ones that I'm taking.
Yeah, that's the one that I usually take because like I think you're mentioning that like discipline is like a very huge thing in here. So
Yeah.
I don't really like taking all the trades because like I feel like once I'm funded, I do not want to like blow my account. So I'm just trying to like build that discipline and like taking.
Exactly. Yeah, yeah. You need to build a discipline and the consistency because the thing is, like, I always tell people like getting funded is the easy part. Staying funded is the hardest part because like, whatever you did to get funded, you should continue doing that because if you change it even just one little bit, like you change your TP, your stop loss, you change your strategy,
Hmm.
it just goes out the window, bro. Like, you just end up going, you trade emotionally and you don't really have any consistency with your entries.
Oh no, for sure. Yeah, even like FOMO trades, I don't let that get to me. Like even if I don't take a trade like for a whole week, I just feel like, it's just 2 more days, you know what I mean? And then I get back
Yeah,
in
yeah.
Monday. So
Honestly, it's better to not FOMO and then just, follow the position and see if it hits
mhm.
versus if you FOMO into it and you lose, you're gonna be pissed because you're like, damn, I should have just waited, or I should have just like let that trade go and
Yeah.
followed it instead of hopping in with it.
Yeah.
Yeah.
So basically that's good. I feel like I'm in a good discipline. So hopefully I like get it funded soon. So it's
Yeah. Are you
really
you in profit on your accounts?
yeah, like
Okay.
barely a few hundred.
That's cool. I mean, you're still in profit. You're doing better than most, right? Most people are blowing accounts, bro, left and right. So like, if you're able to keep them alive and not blow the accounts and still be in profit, that's a win, bro. Because a lot of people are complete opposite.
Yeah, that's how I want to be disciplined. And when you always talk about being disciplined and stuff, and like you're always saying like sit on your hands. I'm like, doing that. So it just kind of helps me for the future and stuff. So,
Yeah, yeah, 100%. You're starting out with like a good mindset. Because if you start out being greedy and gambling, then you're just going to be greedy and gambling the whole time, and you're never going to find consistency.
mhm. Yeah. So that's the plan. But it's mainly all my questions.
Yeah, for sure. Yeah, we covered a lot of stuff. So yeah, if there's any other questions, bro, feel free to let me know. If you want the replay, I can send you the replay for this if you want to watch it in the
Hmm.
future. Uh,
If you don't mind.
yeah, I'll send it over to you just in case you want to review what are imbalances and stuff like that.
Mhm.
Yeah, I send it to your Discord.
Okay, perfect. Thank you.
All right, bro. If you have any questions, feel free to hit me up. Otherwise, I'll see you on the live session tomorrow.
Okay, perfect. Yeah, I'll see you.